Good morning, everybody, and happy Easter. I know this is a very different Easter long weekend than pretty much all of us are used to, but this is the times that we're in, and we're starting learning to adapt as we can. And speaking of adapting, this is the first time that we've done one of these live webinars for our clients before, so please bear with us a little bit as we've tested the technology out, but hopefully we don't have any glitches. And I'm pretty sure everybody on the call knows me. If you don't, Brett Millard speaking, and I'm going to be hosting today. And I'm joined by both Scott and Ryan, who are going to be doing the main part of the presentation for you. And Scott or Ryan, just let me know if the volume is too quiet or too loud here, please. So for our presentation today, we're going to have two main parts to it. We're going to be going through global market updates and talking about how the markets are performing, how that affects your portfolio and why. And the second part of the presentation is going to be on the government updates. So that's talking specifically about the various government benefits and programs that have been put in place by the federal government and provincial government so far. So what I'm going to ask everybody today that's on the line, there's a question and answer function. If you move your mouse across the screen, you're going to see a Q&A. There is also a chat, but I'll say just use the question and answer function. That way we're not looking at two different windows at the same time, trying to gather all the questions and make sure we don't miss anything. So if you'd like to submit any questions, you have the option to submit them with your name, or you can also click on a box and submit the question anonymously. And we're going to keep all the questions for the end. And that way we're just going to be respectful of everybody's time. And for those people that want to log off when we're done the presentation, they can. And those that want to stick around for the question and answer period, they can do that too. And before we jump into anything, I'd like to just make sure everybody knows who is on our team these days and what's going on. Pretty much all of you know Scott, Ryan, and myself. And I'm pretty sure everybody knows Diane and Amy. Diane's been with us for a very long time now, and Amy's been, I think, coming up on her 2-year mark and was joining our team to replace Brenda when she retired. More recently, we've also had Elaine join our team, and in addition to that, we have a couple of specialists that we brought on in-house. So Olga, Kevin, and Mark Brennan are working in our office, and they are working specifically as the insurance, securities, and mortgage specialists for our team as well. So the team is certainly expanding, and we think that's very important to make sure that we can provide all the services and that we want for everybody here. In addition to that, one of the reasons we decided to move over to IG Wealth and moving our back office is so that we would have additional specialists to support you when we need to do so. We have an advanced financial planning department as well now, and that's run by Christine Van Coudenberg and Jack Courtney. Christine comes from a background of a tax and estate lawyer, and Jack Courtney has been spending over 30 years now as an advanced financial planning expert. And Christine and Jack are supported by a very large team of lawyers, accountants, financial planners that form the advanced financial planning team. And they're there to advise or assist us in advising our clients for things like cross-border, so U.S. Taxation issues, business succession, estate planning, philanthropic planning, executive compensation, and a whole host of other items. So it's really important to understand that we've got a great team behind us, and we can bring them in when needed for certain situations. On the investment side, we have also really expanded our investment mandates a lot in the last little while. And this slide shows the global asset managers that we're using in a lot of our portfolios. And I highlighted 5 of them in particular: BlackRock, PIMCO, Fidelity, JP Morgan, and Wellington, because those 5 managers are 5 of the 7 largest asset managers in the world. And we think that's really important. China AMC is probably going to be in that top 7 or top 10 very soon as well. They're kind of the Asian version of BlackRock. And why we think that's so important is times like right now, and we'll talk about this a bit more in the presentation, where we really want to make sure we have good global diversification and we're using all the available resources. And this is extremely different from the old school, stock picking days where people would buy a basket of Canadian stocks and hope for the best. And so we're going to talk a bit more about the investment management, but I just want to show you the scale of the investment managers we're using at the moment. And what does that mean for you? So in the very, very center, we have yourself, and above that, we've got the Spear Wealth IG Wealth Management team. And that's the in-house financial planning team that's supporting you on day-to-day operations. And you can see inside of or outside of that, we have all of the other resources that are supporting us, from the in-house specialists on the securities, insurance, and mortgage side, on the investments, which we have both the in-house CFA strategists as well as all those large global asset managers, the advanced financial planning team, and then of course your own personal advisors, your lawyers, accountants that we can wrap into those discussions when needed as well. And it's really important that we're coming with this very encompassing team of professionals to help you in any transactions or any financial needs that you have. So I wanted to just kind of briefly talk about our team, but I'm going to jump right into today's agenda. So in the presentation, I think we're going to have it to about 40 minutes in length. We're going to start off talking about the current market conditions, and that's going to include a video from Herp Lamba, who's one of IG Wealth's senior vice presidents, and he goes through a lot of details, just how the economy and markets have performed in past recessions like this, and talking about the importance of sticking with your plan. Then we're going to switch gears, talk about the government benefit programs for both individuals and businesses. And finally, we'll, as I said, open it up for questions from the audience. So with that in mind, I'm going to pass the presentation over to Ryan Dawes, who's going to start us off today on the global market updates.
Thank you, Brett. I want to welcome everybody and thank you for attending today. With all the recent developments, we wanted to find out how you as clients feel about the current state of the financial markets. So we've prepared a short survey. The options are: I am really freaked out by the swings in the market. I am nervous but doing okay so far. I am not worried at all and focusing only on my long-term plans. Brett, can you please start the poll?
So the polling should be showing up on your screen right now. You can actually click which of those choices you feel is closest to your current feelings about the market volatility. And we thought this is important just to gauge the audience and how everyone's feeling today, so we can make sure we tailor the presentation as appropriately as possible for you. And I'll leave it open just for about 10 more seconds. So it looks like we didn't catch everybody, but we had quite a few of the people clicking in on the poll results. So I'm sharing those across the screen right now. Ryan, can you see those?
Yes, I can. So it looks about like 15% of you are somewhat freaked out by the markets. You know, about 40% are nervous but doing okay so far, and about half of you, which we like to see, are focused on the long-term plans. I think any type of nervousness or you know, concern based on the markets is driven from uncertainty. So I'd like to take a step back and just kind of summarize how we got here, where we are right now, and what we can expect going forward, hopefully removing some level of uncertainty from our clients. So what happened? In early January, researchers in China identified a new virus that has infected dozens of people. By end of January, the virus known as COVID-19 had spread throughout the world and led to the lockdown of Wuhan, a city of more than 11 million. In early March, governments around the world were beginning to realize the severity of the virus and started shutting down travel and declaring states of emergency. Subsequently, while these events were taking place, global equity markets started to decline. First at a very benign pace, but as the global number of cases increased, so did the speed of the decline in the equity markets. Around the world, people were asking the following questions. How many people will contract it? What will its effect on humans be? What measures will be taken by the governments? And what will the effect on the economy be? This uncertainty sent the equity markets tumbling and pushed us into a bear market. So where are we now? Countries around the world have taken to flattening the curve, recommending people stay home and self-isolate. Signs of optimism are starting to appear as cities in China come back to life. Markets remain volatile as investors are not sure how long this will last. Governments and financial institutions around the world have learned lessons from the 2008 financial crisis and have been proactive during the pandemic. Making sure credit doesn't freeze up like it did in 2008, lowering interest rates to all-time lows around the world, and providing fiscal and monetary stimulus to global economies. What to expect? COVID-19 will continue to spread throughout the world and densely populated cities. For example, New York City will be very hard hit and has been. We still have many questions surrounding this outbreak that need to be answered. How long will it go on for? When will a vaccine be available? And what will the lasting effects on the economy be? Market volatility will remain elevated in the near future as investors are still uncertain about the economic fallout. Governments will continue to provide various forms of economic stimulus. And as we've seen recently, long-term investors are starting to see value in equities and enter back into the market. With the stimulus provided by the governments around the world and loosening of credit standards, look for the world economy to rebound when conditions improve. Hopefully we flatten the curve and have this happen sooner rather than later. So we do understand that you're worried, but what steps should you take to protect your income now? 1, have a plan and stick to it. Ensure you have a properly diversified portfolio. Invest for the long term. Determine your retirement income withdrawal strategy, and take professional financial advice. As mentioned, we have a large team of experts behind us at IG Wealth. One of these people is Herb Blamba, who is a Senior VP of Financial Service Distribution. Herb has over 21 years of industry knowledge, and I'd like to share a short video recording that he has put together to discuss the importance of maintaining confidence in your long-term plan. Brett?
Hello, my name is Herb Blamba, Senior Vice President of IG Wealth Management. First and foremost, I hope you and your family are staying healthy and safe during this difficult time. Like you, I'm concerned for the wellness of my family and my community, so we've moved our office to work from home. As such, I'm reaching out to you in a new way from my home to yours. Welcome. Now, as we all do our best to stay well, we follow the advice of the health professionals to eat properly, get enough sleep, exercise, and manage our level of stress. On the topic of managing stress, it starts with acknowledging the actual stress point or emotion, assessing the risks involved, managing the risks we can, and doing whatever it takes to help protect against the risks we cannot control. Now, during volatile times, financial uncertainty can be an added stressor. We can help alleviate some of that stress for you by sharing how we have built your personalized plan to include strategies that address risks to your long-term goals. We can't control what happens in the markets over the short term, but if you understand how we manage your plan to meet your long-term objectives, you can face the future with confidence and stay the course. Now, as market volatility increases, investors have a natural tendency to want to move into safer investments, hoping to avoid further losses. Reacting to short-term market noise by making dramatic portfolio changes can have a negative impact on achieving your long-term goals. Now, history shows that by maintaining discipline and perspective during market downturns, a patient investor will often be the one rewarded when markets return to an upward path, which they always do. So this year, we're experiencing significant volatility as a result of the global pandemic. This exogenous event has created uncertainty, and during uncertain times, the world stock markets tend to decline in the short term. That's why it's so important to have a diversified investment portfolio. When you diversify globally as well as by asset class, it creates stability in the portfolio during times like we're experiencing today. Now, it's important to note what you're seeing on television and reading in the headlines is not necessarily what you're experiencing in your portfolio. Why? Well, as highlighted on the slide, the broadest Canadian stock market, represented by the S&P TSX Composite Index, was down approximately 20% for the year as of this taping. However, many of our managed solutions were only down a fraction of that amount. Proper portfolio construction reduces risk and provides downside protection. For the last 11 years, we've been enjoying one of the longest economic expansions and strongest bull markets in history, but you wouldn't have known it on March 9th, 2009. On that day, the S&P 500 index was down by 50% from its previous high, and many people believed capitalism had failed. Taxpayer dollars were being used to bail out the global financial system, and the forecast for the future was bleak. there was little optimism for the stock market as it was believed that economies wouldn't grow for many years to come. Since March 9, 2009, we've had one of the greatest bull markets in history. But since that time, investors have lived in a constant fear of the next financial crisis, as you can see in the slide. Now, we've endured many events that seemed at the time to be permanent barriers to future financial success. In each one of these instances and many others, the first reaction of the stock market is to decline, but then markets eventually rebound. In fact, over this ongoing cycle of crisis and recovery, markets have continued to reach new highs. As the graph demonstrates, the S&P TSX has delivered an annualized return of approximately 9% since 1956 and has proven to be resilient through the worst market conditions. Over the same period of time, there have been many instances when the S&P TSX declined by more than 10%. As the chart illustrates, this has happened 24 times since 1959, yet each time the market recovered and achieved a higher level. Throughout history, equity markets have experienced volatility, yet despite this, they continue to be resilient. Staying the course is extremely important during periods of volatility, as it enables investors to fully recover from these periods and achieve their long-term investment goals. Now, the question I like asking is, if you could go back in time knowing what you know now, how would you have capitalized on the downturns of the past? Now, most would answer, if I had money, I would have bought more at those times, and you would have been right. But what if you didn't have any more money? That is where our world-class sub-advisors come in. We have some of the best and largest asset managers in the world managing the investments on your behalf, looking for opportunities right now. Many of the strongest returns in the markets occur in the period immediately following a sharp decline, when individual investors are feeling the worst about what is happening. Since 1950, following the worst 12-month periods of performance by the S&P TSX, the market made solid gains just 12 months later, with only one exception. And within 5 years, the markets were up significantly, meeting and exceeding long-term return expectations. Now, in order to take advantage of those returns, it's important for investors to continue to focus on a long-term plan, stay the course, and remain invested. Those who exit the markets, even for a short while, risk missing great opportunities when the markets recover. There are 5 principles we follow with your IG Living Plan that have stood the test of time through all market conditions. 1. Use time to your advantage. Time is your greatest ally. 2. Diversify your portfolio, making sure you don't have all your eggs in one asset class or country. Number 3, avoid emotional decisions. Most decisions we make off of emotion are usually not the best ones. We need to follow logic. Number 4, maintain a long-term focus. Reason is your IG Living Plan is designed to last your entire life. And number 5, stay invested. That is how you win, and that is how you succeed. Now let's unpack these principles one by one. Investing for the long term is one of the best strategies for offsetting short-term market volatility. Financial markets can quickly move in and out of favor. Staying invested ensures you're always capitalizing on the upside of the market and reducing the impact of short-term market volatility. Although the probability of negative returns in the short term is relatively frequent, the following chart illustrates that, more importantly, the possibility of receiving a positive return greatly increases as the investment term lengthens. Said simply, in the short term, markets are very unpredictable. However, over the longer term, they are very predictable. They are positive. Now, deciding what to invest in can be a daunting task. Whether you're a new or experienced investor, investing in a diversified multi-asset portfolio removes the guesswork of how to successfully invest over the long term. This chart demonstrates that, in many instances, the top performing asset category changes every year. As well, asset categories that are among the best one year could be among the worst the next, while others remain somewhat consistent year over year. By diversifying across different asset classes and investment styles, investors can offset risk and increase portfolio returns by balancing exposure in both positive and negative market environments. Using a portfolio approach to properly diversify your assets can reduce the negative effects that any individual security or asset class may have on the performance of your portfolio. Financial markets don't always move in the same direction. By carefully diversifying your portfolio, we can reduce your risk and enhance your chances of successfully attaining your long-term goals. Now, if you look at this chart, you only experience the roller coaster ride of emotion if you allow yourself to get distracted by it. There's an old saying, buy low. Note from this illustration, when a typical investor is feeling the worst, where they're feeling despair, nauseous, dejected, is the point of greatest opportunity. That is the paradox when it comes to successful investing. Since 1948, the S&P TSX has seen 50 positive calendar years compared to only 22 negative years. In other words, it has provided positive returns approximately 70% of the time throughout its history. Those are great odds. In the chart, annual returns since 1948 are plotted within the respective ranges. The result is a fairly normal distribution in what is statistically referred to as a bell curve. Most returns are hugging the 0% to 10% range. Of particular note, look at the year 2008 on the far left-hand side. It saw a decrease of 33%. In contrast, the following year, 2009, saw the pendulum swing completely the other way, with the S&P TSX returning positive 35%. Generally, negative returns tend to be followed by positive returns, which is why it's important to stay the course. All investors love the prospect of a rising stock market. However, once the trend starts downward, many investors feel the need to be defensive and retreat to the security of cash or money market instruments. While no one likes a turbulent market, those investors who can focus on the long term and stay invested, as this chart demonstrates, stand to gain. For example, an investor who stayed fully invested in the S&P 500 Composite Index from January 1st, 1990 to December 31st, 2019, so basically a period of 30 years, realized a 7.7% annual return excluding dividends. Conversely, an investor who missed the 50 best days of the S&P 500 over that period of time, so basically 1% of the trading days, realized a negative 0.4% annual compounded return. So by missing a tiny fraction of the trading days, they would have given up all of their returns. That is why timing the market is difficult. In fact, it's next to impossible, as you need to be right twice, when to get out and when to get back in. Time in the market is what is essential, and that is why staying invested is so critically important. A combination of discipline and perspective is the key to reaching your long-term investment goals. In contrast, obsessing over daily market fluctuations and short-term noise can be a surefire way to fall short. One way to achieve this fine balance is by having a long-term plan and then, most importantly, sticking to it through all market conditions. While this may sound simple, recent market conditions have put investors to the test. Veering off course from a carefully thought out plan can turn a temporary loss of confidence into a realized loss on an investment portfolio if you panic and lose your focus. Now, every IG Living plan is developed with a holistic viewpoint and is synchronized across all aspects of your financial life. When you have a holistic financial plan developed specifically for you with expert advice, you know when and how to act, and you can be confident in the decisions you make. IG Wealth Management is in this with you. We've tested our approach with cutting-edge predictive software, and we've partnered with leading investment managers from around the globe to help deliver results. Together, we can work on creating and maintaining the plan that's most suitable for your unique circumstances. We take a team approach when building your plan. With you at the center, your IG Wealth Management consultant uses their team's expertise, plus the experts we have in all areas of financial planning, to produce not just good, but extraordinary results. We also believe in coordinating the planning with your other personal advisors, like your lawyers and accountants, to ensure we're all working together on your behalf. This allows us to move quickly, but we do so with complete conviction and confidence. It's important not to be distracted by the headlines, daily news, and constant fluctuations in world stock markets. Remain focused on your IG Living plan. The plan should be reviewed on a regular basis, especially during times like today, to ensure you're on track to achieve your specific goals and dreams. Your plan will provide the clarity on how to stay the course and capitalize on any attractive opportunities that present themselves. Now, your regular investment statements serve as a snapshot at a moment in time. For example, you will soon be receiving your investment statement for the end of March, and it will show you the value of your portfolio on that day. During market downturns, it's natural to feel nervous or unhappy if you see a financial loss on your statement. We definitely understand how you feel, but we also want to remind you that the loss exists on paper only and is not realized until a decision to sell is made. So a loss is not a reality until you actually sell. And as your plan has been designed for the long term, our recommendation is to resist acting impulsively and stay invested. When building your IG Living plan, it's important to stress test it. This means using our leading-edge financial planning software to determine the probability of success of your current plan. This advanced technology is available for your plan. If you'd like to review it further, please discuss with your IG Wealth Management consultant. Now, most projections that are created by software will use averages. For example, if you projected a 5% compound average annual rate of return, the software will model your plan as if you're going to achieve a 5% return each and every single year. We know this is not reality. Some years will be higher than 5%, the other years will be lower. In other words, you will experience fluctuations in returns from year to year. These fluctuations, or what we call sequence of returns, truly matter. So we run several rigorous trials of how you could achieve the compound return you have projected to model current events like what you're going through today. We then determine your probability of achieving your goals. Our focus is to get your plan as close to 100% as possible, which will help you look forward into the future with clarity and confidence. Over the course of our investment years, there are only a limited number of times when major market corrections will lead to highly attractive investment opportunities, and we believe this is likely one of those times. As legendary investor Warren Buffett has been known to say, be fearful when others are greedy, and greedy when others are fearful. Quite often, when markets appear to be at their bleakest and everyone is panicking, a focused long-term investor stands to benefit the most. Ladies and gentlemen, we're here to help you navigate and prosper through these turbulent times. On behalf of our entire IG Wealth Management family, we wish your family great health and safety. Thank you so much for your time today.
HERPS provides a lot of great insight, but I want to emphasize 2 key points. First, it's imperative that clients stay invested and remain calm when markets are turbulent. Market volatility and major downturns may cause investors to rethink their investment approach, including even moving to cash. Historically, a better approach has been to follow the lessons of the most successful investors. Stay the course during a downturn, and even adding to positions when situations seem to be at its very worst. And then sit tight for what history tells us will be the inevitable recovery. As shown in this slide, bull markets significantly outweigh the bear markets, and it pays to stay the course and stick to your investment plan. I'd also like to share a quote with the great investor Warren Buffett. He is famous for saying he likes hamburgers, and when hamburgers go on sale, he eats more hamburgers. The second is the strategies used to demonstrate income in retirement by many of our investment colleagues are often oversimplified. This chart is an example of that illustration. The investor starts retirement age 65, draws 5% per year, or $600 a month in our example, and runs out of money at age 89. This seems like a logical and realistic example, but ignores the nature of markets and how market fluctuations could negatively impact your income plans. Let's look at how a downturn in early stages of retirement can significantly skew this. A market downturn at the beginning of your retirement can have big effects on your future income. Having to take income from your investment and not from your growth means there is less left behind to create income for future years. How to lessen this risk? It's about diversification. If we revisit the example that we've shown you earlier, an investor drawing out 5% per year and apply the average return with a market drop at the start, but the same overall 5% return during retirement. Even though the retiree continues to draw 5% and their average return continues to be 5%, the impact of the portfolio suffering the most negative year early on resulted in this scenario running out of money at age 83. This sequence reduced the total income drawing years from 89 to 83, a dramatic 6-year reduction in drawing income with the same average return. This demonstrates the retirement risk known as sequence of return risk, the impact to income planning using an average rate of return, but not accounting for the sequence or order of the annual return that will make up that average. This is one of the most important pieces of a retirement plan, and yet is overlooked by most investment advisors when running a retirement simulation. By utilizing the IG Living Plan, we account for hundreds of different market scenarios to make sure you are fully funded for retirement. By using a portfolio approach, we properly diversify your assets. We can reduce the negative effects that any individual security or asset class may have on the performance of your portfolio. Financial markets don't always move in the same direction. When stocks are declining, bonds may stay flat or even increase in value. With this diversification, we can reduce your risk and enhance your chances of successfully attaining your long-term goals. I'm going to turn it back over to Brett to add some comment on this. Thank you.
Thank you, Ryan. Two additional comments I wanted to add. The first is Ryan was just talking about portfolio diversification. I think it's so important. We've been talking to all of our clients for several years now, how we're really trying to hold our portfolios with a serious underweighting in Canadian equity. And Canada's equity markets represent about 3% of the global marketplace. And the majority of investors inside of Canada have like 50 to even 100% of their equity portfolios sitting inside of Canada. So in Herp's video a few minutes ago, he mentioned that the maximum drawdown so far in this downturn was close to 30% for both Canadian and US markets. But there's a big asterisk there, because the Canadian market went down 30%, and the people that hold a lot of Canadian equity, they could see their portfolios going down as much as 30% then. The people that are holding in the US equity market are taking advantage of the exchange rate. And it's something that we've talked to all of you about numerous times, saying anytime we go through something like this, we're going to see a flight to safety in the US dollar. So if you take just directly that same S&P US index and the Canadian index, and once you factor in the exchange rate, the Canadian markets went down 50% more than the US markets during this downturn. Right, so that's something I know that we've been pretty adamant about for years, and it's really performing exactly how we said it would during something like this. So the portfolio diversification is so important. And as we kind of go into the recovery, I mean, much like we saw in 2008, the US market recovered inside of like 7 or 8 months, and the Canadian market took years to recover. And that's something that we're expecting to happen again this time around. The most recent unemployment numbers came out on Thursday in Canada and the US, and Canada had 5 million people become unemployed in the month of March, and the US had 15 million. And you say, well, geez, the US had 3 times as much, but actually think about that for a sec. They have 10 times the population that we do, and they only had 3 times as much unemployment, meaning Canada had a much, much higher hit to our employment numbers. And that's even with the actual outbreak of COVID-19 being much larger in the US. So everything that we've been kind of fearful about the Canadian economy and the ability to withstand something like this seems to be coming to reality right now. The second thing I wanted to mention is that in Herp's video, he talked heavily about the importance of having a proper plan. And for many of you, we've already set up one of the new IG Living plans. And for anyone that hasn't yet, I know that Scott sent out a number of emails reminding you to follow up or get in touch, and we'd love to set that up for you as well. So if anybody doesn't have one of those new living plans set up, please let us know, because I think it's really important to have that kind of written plan in front of you so that you can see what's going on and feel a bit more comfort during times like this. With that, I'd like to turn things over to Scott next, who's going to be talking about the government benefit programs and discuss kind of what we know so far, even though there is still many details to come. So Scott, take it away, please.
Thank you all again for joining us this morning. I hope you and your families are doing well through these tough times. As many of you have seen in the news, there are quite a few programs in place to help Canadians. I'd like to take a couple minutes with you all to review them. I also want to note that the government is consistently updating these programs. In fact, as we speak now, our Government of Canada is meeting to vote into law a number of the programs that we will discuss, including the one that we have heard about with the 75% wage subsidy. The first list that I have up today is those relating to individuals and families. Of course, everybody's heard of employment insurance. They have expanded the rules regarding this a little bit, so it now is broader terms on sickness and injury eligibility. With that plan, as long as you had a full-time or close to full-time job and were laid off, you are eligible. They have also waived on that program the existing 1-week waiting period. There is also the Canada Emergency Response Benefit that they have created for those self-employed that are not eligible for EI benefits. And this is also eligible for those that are sick, quarantined, caring for somebody that is sick, or for families that don't have child care or school anymore and they have to stay home to take care of their children. Both of those first two programs are available through the CRA My Account website. And as of April 6th, both of them are open for application. For those families that are receiving the child benefits or the GST credit, they have increased those. There is no need to reapply, and those extra bonuses will be coming out with your May payments. For any students that have student loans with the Government of Canada, there is an automatic 6-month moratorium on your payments, and there will be no interest accrued during that 6-month break on repayment. Another one for Canadians to help you keep money in your pocket, the tax filing and tax payments have been deferred. Filing deadline was extended until June 1st, and payments for individuals self-employed has been extended to September 1st, 2020. BC, for our clients that are living in BC, there is the emergency benefits and the BC Climate Action Tax Credit, where they will be giving clients, or residents, a one-time payment of $1,000 and the climate action credit of $218 per adult and $64 per child. We haven't got all of the details on application, but they are saying that payments will be made in May for the BC emergency benefits, and the application and payment will be in July for the climate action tax credit. Now, there has been a couple changes to the CRA My Account. I know that we sent out an email a couple weeks ago about trying to get everybody registered for that portal. Going forward, they have restricted when you can log in. So those with birthdays in January, February, and March, you can only access the site on Mondays. April, May, and June, Tuesday, July, August, September, on Wednesdays, October, November, December, Thursdays, and they have opened up Friday through Sunday to anybody, but the system is quite overlogged and you may have issues getting in. So if you try to access the website on your specific day, you will have much better success. The second slide we're moving into is some of the programs for businesses and small businesses. The rules regarding these programs are quite detailed. They are changing quite fast. So please reach out to your business accountant or our team for further details. But briefly, they have the Canada Emergency Wage Subsidy. This is the one that they're voting on this morning. Originally, they were talking about a 30% reduction in business income, but they did speak the other day about reducing that to a 15% reduction in business income to qualify. We have the Business Credit Availability Program. This is allowing businesses to take a loan through BDC and EDC to help them carry on their business through these tough times. Application is actually through your financial institution. So if you have a small business account, whether it be through BMO, RBC, TD, they will send you an email with a link on how to apply for these programs. For the loan, as long as it's repaid before December of 2021, they will actually reduce the repayment amount. So if you take a $40,000 loan, you actually only have to repay $30,000. So the business actually gets to keep $10,000 interest or repayment free. There is a deferral of your business income tax owing. So those are deferred to August 31st. Deferral of your sales tax remittance of GST until the end of June. And then they've got an extension of the work sharing program. One of the most important things for corporations, however, is they have not extended your corporation reporting deadline. So you do need to file your yearly return as you had in the past, as there is no deferral on that. For our retirees, For this year only, the government has said they will allow a reduction in your minimum withdrawal rates by 25%. While the final details are not fully released, here's what we do know. It has been confirmed into law that you can reduce your withdrawal rate by 25%. You do have the option to continue taking 100% or have the amount reduced if you do not require the funds. It will not happen automatically. If you want to reduce your minimum withdrawal for 2020, you do have to contact your financial advisor, and we will file paperwork to have that reduction implemented. For those that have already taken out their 100% minimum, you cannot recontribute that or change after the fact. It's only for those that have not withdrawn this amount as of yet. They're also talking as back in 2008 where you can recontribute, but we will find out about that later on in the year. To summarize, a couple other little programs that have come in. Lenders from other institutions have implemented plans for deferral of payments for mortgages, vehicle loans, as well as some life insurance companies are also offering deferral of payments to policies as long as the payments are made up at the end of the deferral period. The details on all these programs vary quite widely. We as a team definitely recommend, if you're looking at deferring your mortgage, vehicle loan, life insurance, please contact us so that we know that you understand the full details of that deferral program, because as with mortgages, simply, if you defer your mortgage, you are still collecting and accruing interest on that account. So it may not be beneficial if you have the resources to continue those payments. Again, as advisors, we're watching the details of these programs daily. We encourage anybody who's looking at applying for these to review the CR website for the most up-to-date terms, or contact our team, and we're trying to keep up-to-date daily with those as well. I want to quickly summarize how we as a team can help you through, and you've heard this from us a couple times already. That living plan is a holistic financial plan, and right now it's never been as important as it is. What we take into account when we're building those plans for you is managing your cash flow, preparing for the unexpected events like this, major expenditures that you may still have coming up in your lives, maximizing your business success, and of course, optimizing your retirement and passing on your wealth to future generations or charities if that's what you choose to do. Our process, of course, as Brett mentioned, please reach out to us when you're ready to create that plan. We'd love to sit down virtually, of course, right now and work on that for you. But we'll explore your current situation, clarify those goals and objectives you have, develop that comprehensive plan, review your investments, implement the strategy, and then of course, monitor and adjust that strategy as you go through life to make sure that it's still meeting those goals. So as we come to the end of the presentation here, we of course do have that question and answer window open. If you do have any questions, you can ask us, either unmute your microphone or you can type that question in. We'd love to answer those. Of course, if you do have any questions following the presentation, please reach out to any of our team members and we'll ensure that those questions are answered and you have any of the information that you need. On behalf of myself and the rest of the team, I'll just hand it over to Brett here quickly, but thanks again for joining us.
Oh, thank you, Scott. So one last thing I just thought of mentioning, when we put those slides together with the government benefit programs, we put a couple of the British Columbia pieces on there, but we also have a detailed document that IG put together that shows the various benefit programs for every province across the country. So for anybody on the call, or even any of your kind of friends or family that might have questions that live in other provinces, by all means reach out. We've got a summary of those that's being updated on a regular basis. As Scott just mentioned, and I talked about at the beginning, we do have the question and answer function on Zoom. So if anybody has any questions that they'd like to submit, you can submit them anonymously, or or you can have your name on there when it comes through. And you can have the option if you'd like to ask a question live. I can also unmute the microphone. So please feel free to submit any questions right now. And other than that, thank you all very much for attending. This is the first time we've tried something like this before with the webinar. I think I mean, from my view anyway, it went pretty smoothly. Hopefully we hear it was similar for you guys, and hopefully you found that the 45 minutes that you spent with us today was valuable and helped answer a few questions. So if there's any questions, feel free to put them up there. Otherwise, thank you very much for tuning in, and have a very happy Easter, and hopefully you get to visit with your family and friends virtually if that's the only option available right now. And we'll talk to you soon. Looks like we have no questions, so we must have done a really good job explaining things.